Hi, so it's no secret that Warren Buffett is sitting on a huge mountain of cash. He reveals this each quarter in his Berkshire Hathaway financial statements. At last count, Phil Town also is in over 60% cash. Look, I'm pretty sure if we were to ask Mohnish Pabrai or Charlie Munger, Lee Lu, Guy Spier, and a handful of other legend investors, they would all be sitting on similar levels of cash right now. So what's going on? Why so much cash sitting on the sidelines? Well, today we're going to find out why. So if you're new to my channel, well, welcome. My video is about investments that anyone in the world can make. And I'm a full-time investor with almost a decade of investing experience, and I have built a reasonable sized investment portfolio that I'm aiming to continue growing at about 20% per year. One day I want to start an investment fund, but until then I'm trying to help as many people as possible understand what it is they're actually investing in. See, most people spend more time researching their next computer or their next phone than they do their next investment. Now, I've based a lot of my knowledge on the great investors. We're talking Peter Lynch, Warren Buffett, Charlie Munger, Mohnish Pabrai, and a handful of others. Now, look, I'm not perfect at this. Not every investment that I make is going to be a home run, but we definitely will find some great investments and push for that 20% goal. And today is a really important investigation in how the best investors make money by simply waiting. Alright, so there's just way too much speculation on which way the market is going to go in the short term. We're getting bombarded with this message all the time. We're seeing it everywhere, and it's just because it's good clickbait. Now, let me be super clear with this message. No one, and I mean absolutely no one, has any idea in the next few weeks or next few months what is going to happen in the overall stock market. If anyone thinks they can predict it, I immediately lose respect for them, and so should you. Even I can guess the correct answer in a coin flip 50% of the time. So, for some unknown journalist to write an article talking about the impending stock market doom, well, this is just all garbage. So we don't know what the short-term future holds, but we're going to look at some indicators of what might be somewhere around the corner. Remember, we have no idea exactly when. Maybe it's in a few years, maybe it's next week, maybe it's tomorrow. We just don't know. Do you remember the movie The Big Short? Well, these guys were right on the crash, but they had no idea when it was going to happen. It nearly sent them all bankrupt waiting. They made a movie about this unbelievable trade, and even these guys had no idea when it was going to happen. So don't ever think you can predict the short term. Did I make that clear enough? Now we're going to take a look at something called the Buffett Indicator, as this is what Warren Buffett would look at to get a feel for what value is out there. What he does is he adds up all of the value of the stocks in the entire country. For example, Apple is about $2 trillion, Amazon is about $1.5 trillion, and so on. He then gets this total number and divides it by the entire GDP of the country. Now GDP is the value of all the goods and services that make up the entire economy over a given period. So this should give us a great indication of whether the companies in the economy are valued at about the same as the production that they're creating for the economy. Now, over time, this forms a trend line, as you can see by the 0% line in the middle of this chart. This is a pretty incredible chart in my opinion. As you can see, back in 2000, with the serious overvaluation of the tech stocks, the stock market got way too hot compared to the GDP. Now, leading up to the GFC in 2008, the market didn't get too hot, but the economy fell over because of the housing issues in the US. As you can see, the stock market overreacted to the output of the economy and became one incredible opportunity to invest, as Buffett did successfully. Now, let's talk about today. We are now at a serious overvaluation on the stock market compared to the output of the economy. Now, this obviously makes a lot of sense, as the economy has really been hampered by the lockdowns, but the value of the stocks hasn't followed the GDP. Look, I don't know where this is going in the short term, but I am confident that the stock markets move toward the average over the medium to long term. Maybe the market keeps going higher for another 2 years. Maybe it comes crashing down. Maybe it even just stays about where it is and for the next 5 years as the economy catches up to those valuations. According to this chart, I think the overall market is overvalued. Okay, I showed you one indicator used by the best investor of all time. Now here is the second indicator that Phil Town likes to use, and I'm sure other value investors like to look at this as well. This is called the Shiller PE graph, and this is another good measure of market valuation. The Shiller PE chart here shows an adjusted PE ratio for the entire stock market. Look, I won't get into the specifics of how this is calculated, as you can just go Google that yourself. But as you can see, it seems to have been an accurate representation of the market. Okay, now the average of this Shiller PE is somewhere between 20 and 24 generally, but it doesn't trade in this range very often. The market is just this wild beast, often overvalued, often undervalued. Currently, it's well above 30, which, as we can see, matches two other interesting times in history that have happened. The first of these crazy valuations was before the Great Depression in 1929, and then the second is the famous overvalued tech bubble in 2000. Okay, so Warren Buffett is sitting on more cash than he ever has. Phil Town is over 60% in cash equivalents as well. And most of the other investors that I like to follow, like Mohnish Pabrai, Guy Spier, Lee Lu, Charlie Munger, Norbert Lu, they haven't been buying much for a long time. And the funds that these guys manage are some of the most successful of all time. So why are they doing this? Well, they're waiting. They're waiting for individual stock prices to reach their buy prices. I bet they had their eyes on some companies that they would love to buy, but they're just being patient. Maybe some market-wide event will happen like in 2008 or in early 2020. And if they get the prices they want, well, in the past, these guys have invested big time. So when these prices come along, they really fill up their buckets. And it's clear that they're preparing by not investing in anything at the moment and holding so much cash. So what should we do? Well, I think we do the same thing, of course. These guys are legends for a reason. They are more experienced than most of us mere mortals, so I think we just do the same thing. Well, I know that sounds super boring. These guys are just sitting around doing nothing. And yes, I know you're going to say, Andrew, those prices that you have said in your previous videos, you will never get those prices. You are crazy to think you will be able to get the prices you want. Okay, I get that criticism quite a lot, and I really understand why. Sitting in cash for years doesn't seem like a good investment, and it isn't, and I agree with that. But buying anything overvalued without any margin of safety is a worse investment. Okay, but I have the experience of being doing this for quite a long time now, but what if you're relatively new and you really want to get into the market? Well, you don't have to sit on 100% cash, but follow the lead from these guys and keep plenty up your sleeve. Maybe 60% is a good amount to hold in cash for the time being. But remember, it is even better if you could hold off and wait for the opportunity to come to you. And for those that have experience, there are still plenty of mid and small sized companies that will rise no matter what happens to the overall market. See, in the period from 1967 to 1982, when the market went nowhere for 15 years, you could have found 187 100-bagger stocks. That's 187 companies that go up 100 times from your initial investment. So there are always undervalued companies no matter the market. You just have to find them and put in the work. So you might be wondering what I am doing. Well, what I am doing is I am working as hard as I can to be prepared. I am studying companies and building a watch list. A watch list is all of the companies that have passed my examination, and I've worked out their fair value. The values that I've worked out were just estimates, and I can't predict the future. So I set my buy prices in line with what the best investors in the world recommend, and that is a 50% below my calculated fair or intrinsic value. Well, that's going to be my buy price. Please go check out my 2021 wishlist video to see the companies in detail. I don't know what is going to happen in 2021. But what I've learned from 2020 is that it's a good idea to be prepared for something dramatic. I wish I had done more company investigations before the market fell in March and April of 2020. That way I would have had my buy prices organized and I would have known what I wanted. I still did well, but I think I could have been far more organized. So right now I'm not buying, I'm just preparing to buy. And before everyone says that these silly prices just won't come, my prices are just crazy low. Well, for a handful of my companies on my list, it did already happen in 2020. And based on the Buffett and Shiller indicators that we've looked at today, I would say we're currently very overvalued. So I'll be ready if something changes. I hope you are too. Okay, just a small reference to an upcoming video that I'm making. So I have found a strategy that will help me get a decent return on my money while I wait for the prices that I want. It's something both Buffett and Phil Town are doing, and it is something I'm going to be getting big into while I'm waiting. Now, don't get too intimidated by this title. It is called selling put options. Now, people are going to say that's risky, but I can prove that it's not. I highly advise you do some reading about this topic, as it takes a while to get your head around how it actually works. But essentially, it's getting paid a decent amount of money to wait for the prices you want. Look, it sounds too good to be true, but I'll explain everything in a video that I'm working on, and it is just taking a lot of time to put together. Anyway, thanks for staying to the end of the video. Hit subscribe so you don't miss those future videos, and I will see you next time.